Wanted to talk a minute. You mentioned earlier when we were talking about the revenue offsets, the proposal, the revenue offsets as they exist right now, and they could certainly change. They have changed, dramatically over the last 10 days. So, but where they exist right now, two of the proposals are one is a 15% corporate minimum tax domestically, but then also a 15% global minimum tax. Here in the United States, we've had experience with a corporate alternative minimum tax years ago. They jettisoned it as part of the 2017 tax reforms. And so I wanted to, as a tax professional, wanted to get your thoughts on what they're talking about now. Is it different than what we had before, or are they trying to reinstate a tax regime that existed before and didn't work very well? Are they trying to make improvements? What are your thoughts about this new 15% corporate minimum tax?
All right, so I'm glad you asked this. There are two minimum taxes floating around, a domestic one and a global one, and they are totally different in how people should think about them. The global minimum tax, to me, makes a lot of sense. It basically says if companies make money, they have to pay taxes on it somewhere.
Mhm.
And there are various ways of squaring the circle on that. The global minimum tax is one way of doing that. Given how difficult it is to negotiate across countries, let's call that one a win with perhaps an asterisk because maybe it's not designed ideally. The domestic corporate minimum tax is totally different. It basically says if a company takes too much deductions in this country or foreign tax credits, then we're going to move to an alternative system that takes back some of those. And it doesn't fundamentally, that kind of minimum tax doesn't fundamentally make sense. It's basically saying we can't get these things out of the tax code that we think is giving you too low of a tax payment. So we're just going to pose an alternative tax on top of it, which then ends up taking away some of the incentives that companies already have. It would not affect that many companies. I'm not saying that as a defense of the proposal. I'm saying that the effects would not be that widespread
Mhm.
because of various carve-outs in the domestic minimum tax. So I think, it feels like they pulled that one off the shelf, given that the other options had not worked out. But I don't think anyone would describe it as an optimal policy, except under very constrained
Do,
circumstances.
do you think it's going to be something that we end up undoing the way we did the last one?
Well, quite possibly, as sort of as a political thing. I mean, Sinema has said she doesn't want rate increases, right? It would make much more sense to increase the rate,
Mhm.
and it would make even more sense to focus on the tax base. That's kind of the missing thing in all of this is focusing on the tax base, whether it's 199 or a capital gains at death or a state tax or so on. Proposals that raise rates, if the base is broad enough, then they're going to be very strong revenue raisers. If the base is not wide enough, does not have substantial enough scope, then raising rates is going to largely increase tax avoidance.
Yeah, I think that's the one thing that just drives me absolutely bonkers when we get into this marginal rate argument, because if you have a broader base, number one, allows you to reduce your marginal rates, right? But when you also have a broader base, you have less tax evasion, because if you're taxing everything, no matter where you silo your earnings, your profits, your income, it's going to get taxed. But when you create these special exemptions, when you create these credits, these loopholes, et cetera, that encourages people to recharacterize their income in order to fit this loophole. And it just doesn't make sense. If we would just broaden the base, we could reduce the rates and have better tax compliance.
That's right, and a fairer tax system too.